this guy on LinkedIn all the time. He always tries to come in and it's like, oh, government, I love government. I want to have sex with the government.
Hey, everybody, it's Tim Picciott, the Liberty Advisor, joined with John Sneisen, the Economic Truth. And today we are going to cover all the Fed's lies. Well, not all the Fed's lies. We'll be here all day because this is going to be a relatively short episode because we are constantly being fed lies all the time. But I think, I'd be remiss to not point out the fact that, it's been a while since we've done, these types of episodes and a lot has gone on. And it seems like, when you go like a month not really doing shows in economics and you're already basically drowning in information and like every day you're getting a new like ocean of information that's being dropped on you. It's like sort of overwhelming where to pop back in. But one of the things we didn't talk about or haven't addressed yet is the fact that Jerome Powell is now is going to be the Fed chair once again. They did not decide to go with Lyle Brainerd, which actually I thought that maybe that she had a pretty good chance because, she checks off the box of being a woman and it'd be.
And you got to get rid of the Trump guy. Come on.
Well, the thing is, the Trump guy, Jerome Powell, was also the Obama guy because it was Obama that put Jerome Powell in there to begin with. And the thing is, for those you don't know, I went pretty hard for Trump in 2016, to say the least, created a LibertyAdvisor page, which is sort of like the genesis of a lot of like the stuff we're doing right now. And, I just got so pissed off with the Libertarian Party and their picks and how they were being, anti-gun at the time. And, obviously like underneath like the leadership of like Nick Sarwark, who's a complete joke. So, if you guys are going to get political, I'd recommend like the Mises Caucus and what they're doing, like Michael Heiss. But, getting back to Jerome Powell, as soon as Trump got in there, he picked Jerome Powell. And I'm like, wow, Trump does not get it. He does not fucking get it. Like the most important person he could pick is going to be the Fed chair because that's one pick. There's nothing he can do about it. And later on, Trump did go on to say that picking, that's been like the worst decision of his presidency at one point. Now that was before everything ended. So I don't know if he's got like other thoughts now, but to hear all the Trumpsters start criticizing me as an effing libtard and all the hate that was directed my way. And then it turns out that I'm right. And this guy is a complete globalist swamp monster. But the thing is, Obama put him in there. So why the fuck are you picking somebody that Obama picked? And then now Joe Biden picks the same fucking guy. So the most amount of F-bombs I think have ever dropped on an episode. Actually, this episode isn't done yet, so who knows? But it was that episode when he picked Jerome Powell because I knew what that meant. And my first episode I ever made said the Liberty Advisor show was, I don't care if there's 1,000 things I want Trump to do and he does 999, but if he doesn't do anything with the Federal Reserve or at least it changes the public discourse on that message at the very least, then, he's pretty much dead to me. And so I knew right off the bat that he was going to be completely worthless. And so not the main thing I want to talk about today, but what were you trying to say, John?
Yeah, and he could have put in a whole bunch of new Fed board members too, and he didn't.
As I said, nude Fed chairs. Well, hopefully, please do not put Jenny back up there.
Oh God, come on, that would be a very disturbing image.
In that case, we'd be pulling for Lyle Brainerd. Definitely not that.
God, I can't believe you're talking about this. That's disgusting, Tim. Come on, get over yourself.
Begin this train back on tracks. The Fed's Williams thinks inflation can be stabilized without recession. And so let's just get into this. In an interview on CNBC, Williams was asked, and the thing is, people don't know, like the New York Fed president is basically the Fed president, like the shadow president of, the actual power broker, was asked about an op-ed from former U.S. Treasury Secretary Lawrence Summers that there have been few, if any, instances in which inflation has been successfully stabilized without recession. I am confident we can do that, Williams said. Monetary policy over the past century or even longer has shown we can accomplish and deliver stable low inflation and, try to mitigate the effects of recessions, and we can get the economy back to maximum employment, he added. Now, skipping further, I don't see there is any real benefit to speed it up further, Williams said. Ending the purchases at the end of the first quarter creates the opportunity for the Fed to raise its benchmark short-term rates, he said. Williams said he expects inflation to come down somewhat next year, and he sees strong economic growth and further improvement in the labor market. Now, John and I did just film a 2022 prediction video where we get into inflation, so we'll have to tease you guys to watch that one to get our expectations. Obviously, we're not in alignment with Williams, but continuing on, actually raising rates will be a sign of positive development, he said. Williams said inflation is obviously too high right now, and the Fed wants to make sure that the inflation comes back down to the 2% longer run goal. So, there is basically no chance in hell that that they're going to get out of this without a recession. I mean, it's just ridiculous. I mean, I guess we did have, Janet Yellen, who famously said, there'd never be another recession in her lifetime.
Tim, come on. She had a urinary tract infection when she said it. Old ladies that get that gets a little bit disillusioned. So come on, you got to give her a break.
Yeah, and I guess everyone's thinking that Jerome Powell is this like massive hawk, and like that's why we had to go in the direction of keeping on with Powell because
he's like a turtle dove. He's a turtle
it's
dove.
like, if he's a hawk, my girlfriend's cat is a fucking lion. I mean, it's just like it's just ridiculous. And so the hawk is the guy that led us to having the loosest, easiest monetary policy ever, the most reckless policy ever. A guy that's net worth is like $28 million or somewhere near there, and used to have a bunch of money in the stock market, and obviously is conflicted. Like that's the guy who we're supposed to trust on all this stuff to be the hawk and do the right thing. Well, if he didn't do the right thing when he was there the entire time under Trump, like why is he going to do the right thing now? And the thing is, it's like way beyond doing the right thing. This whole discussion is, I mean, it also diverts us from the discussion of the fact there shouldn't even be a Fed to begin with. Go to why we're all slaves to central bankers. If you guys don't understand that, it's a video that I did a few years ago, and actually very prescient, a lot of the stuff that was in there, and that was, I believe, 2016.
Tim, this brings us back to actually there was a post yesterday, and Nancy Pelosi came out and said that federal lawmakers should be able to trade stocks.
Yeah, and they tried to make it illegal at one point, and it was called the Stock Act, the Stop Trading on Congressional Knowledge. Okay. I believe it was my congresswoman at the time, who I think was the main one that was like behind it when I lived up near like Rochester, New York. So shout out to The Rock. And I think it was like one of those things where it made it seem like it was banning it, but then if you actually read the bill, it was actually like legalizing it, even though it looked like it was banning it. And so it's like one of those con jobs that they're so famously known for doing. But there is no way. The thing is, if you couldn't raise rates during the greatest economy ever in the history of the world in 2016, 2017, 2018 without messing up everything, I mean, then like what makes you think you can do it right now when obviously the economy is underneath life support, and so they're going to pull $120 billion a month of stimulus, have it go down to zero, and then start raising rates? Yeah, I mean, it's just utterly ridiculous to think that this is going to work. And as mentioned in previous videos, even if they do raise rates, the real actual rate will probably be more negative than it was in the past, meaning that if the rate right now is on the 10-year treasuries 1.5, and the inflation, let's just call it 6.5, it's 6.8 by their measures, you're guaranteed to lose over 5.5% per year, assuming everything stays status quo. And so the real rate, I wouldn't be surprised in the future if the real rate is like a -7, 8, 9, 10, 20. I mean, who knows? I mean, and the thing is, everything is always fine until the day it's not fine, which is, a lot of the, kind of backing things up.
Got all the unfunded liabilities in the U.S. Like, look at Medicare, Medicaid, Social Security, and all those programs. Like, what is it? Like, they're predicting like a 15, 20, 30 trillion dollar deficit because like in 5 to 10 years from now. Like, what do you like? These guys are nuts because they believe that like this. And I have discussions with this guy on LinkedIn all the time. He always tries to come in and it's like, oh, government, I love government. I want to have sex with the government. And he basically tries to come in and say that, oh, monetary theory is the way of the future. It's like, I tried to tell him, it's like, do you know that every single time you give anybody the chance to create money out of thin air, it doesn't matter how it's created or what kind of new idea come up with, they always fuck up. Like, I'm trying to tell him, and it's like, every single time you give anybody the chance to have unlimited amounts of money, like they will use that to their advantage, not for the people's advantage, but themselves.
Now another article here from Zero Hedge: as markets swing wildly, seeking the Fed put. And for those of you who don't know, like a put option is, you're betting on the price of something to go down to make money. And so effectively they're calling like a Fed put is when the market goes down, the Fed's always there to sort of have their back, just in case, for those of you who weren't aware of that. Morgan Stanley has some bad news. So how low do stocks have to fall for Powell to capitulate and end his rate hiking plans? Or said otherwise, what is the strike price of the Fed put? As a reminder, over the last decade, anytime markets sold off between 10 to 15%, and in some cases even less, we would immediately experience some intervention from the Fed, be it verbal or actual, to stabilize risk assets. In fact, the biggest drawdown in the post-Lehman era until the COVID collapse was the 20% bear market observed on Christmas Eve 2018, which promptly crashed the Fed's tightening plan. You guys can go back to all the episodes I did around that time to see all the stuff that was going down, all the shenanigans. You had the whole plunge protection team come out.
Led by PPT, Tim.
Yep, all led by Steve Munchkin to do everything they could to basically satiate the markets. But continuing,
I forgot the Munchkin. Sorry.
Yeah, another terrible swamp monster pick by Trump. Oh yeah, let's have this Goldman Sachs crony, who then like made a lot of other terrible financial picks. Anyways, continuing on. Bottom line, according to Morgan Stanley, the Fed put still exists, but the strike price is much lower now, in our view. If we had to guess, it's down 20% rather than 10%, unless credit markets or economic data really start to wobble. And this is one thing I've been saying over and over again. I've been talking about how the market really it's not going to be sustained down 20 for long, because that's when the Fed's going to come in my opinion, start printing more. Continuing it on. And I do feel sorry for anyone that's listening to this, like a 1x, 1.5x speed, 2x speed. I want to know in the comments if anyone is paying attention to me right now at 2x speed, because that would be insane. Continuing on, and while Wilson may well be right that for Biden containing soaring inflation. I don't think whoever wrote this did a bad job of that one. Is more important than preserving the wealth effect, because we have reached a tipping point where two are mutually exclusive. Sacrificing markets to contain inflation would be a huge mistake. Why? Because as Wilson also observes, as asset markets correct more significantly as they would in a 20% correction, it would have a greater than normal effect on the economy too, given how levered the consumer is to the stock market and other asset prices like housing and cryptocurrencies. We think the risk of that is greatest over the next 3 to 4 months. Actually, while this is a good thing for the consumer demand, if prices remain elevated, it definitely increases the odds that tapering could be tightening for the economy too, if it leads to significant asset price deflation. We think that the risk of that is greatest over the next 3 to 4 months. The Fed exits QE off this faster timetable. And I was messing up some of that reading because I've had like this problem with my eye where it's like kind of like has its own heartbeat. And so like if you guys like see me closing my eye, it's not because I'm trying to look like a pirate. It's because like I have something going on and just like constantly all day. It's not making it any better. Anyways, John, what do you think about all that the Fed put, how much the market's going to go down, how much they'll let it go down?
Well, like if you could pull up, Tim, pull up my Fed repo stats that I have, like my website, and then actually right now, like you're seeing a slight. It's funny that we call it tapering almost right now. Like basically what they're doing is reducing their quantitative easing, so purchase of assets on the Fed's balance sheet, and it's slightly reducing. I see that especially the what do you call them, the mortgage-backed securities have reduced slightly over the last couple of weeks now. But other than that, like it's still going up. Like we just said in another video that we did about, I think it was 9 trillion a week that it's up still.
Billion.
Even though
billion.
The billion, yeah. Fuck, keep on saying trillion. I'm thinking hyperinflation here, Tim. So sorry. Maybe I'm right next year or the year after. But anyways, I think what's going to happen is they're going to have to, like, they might start tapering and stuff. But like when you look at what other central banks did during these crises, for example, like I just recently looked at, I keep a close eye on Norway Central Bank, Norges Bank. And what they did is they actually have as much as, what was it? I think 20% of 10% of their balance sheet is in stocks. So they actually had to go in and then buy stocks, literally like go into the Oslo Børs, which is the Norwegian stock exchange, and buy stocks to prop the markets up. And I think that's what's coming, Tim, is these bozos are going to keep on, like trying to lower interest rates and all this stuff, but it's just going to backfire on them right away. If you look at our prediction video, this would be perfect. You'll get a way bigger rundown on exactly what we think about that. But so what's going to happen is they're going to try to lower interest rates, get interest rates higher, and then do their tapering of quantitative easing, not even real tapering yet. But then that's going to panic the markets. Like you see just now with a slight lower amount of quantitative easing going on, you see turmoil happening in the markets just by what just recently happened. So I think that the volatility and everything is just gonna keep on becoming more extreme, and they're gonna have more and more issues. Who knows? Maybe they can't even get to real tapering, Tim, with everything, and maybe they just have to revert back to a broader what Ben Bernanke called in his 2002 speech, a broader menu of asset purchases, like going into ETFs or to stocks.
Yeah, I call him Osama Ben Bernanke, but the thing is, well, maybe they'll let it get down to like 20 or 30 or 40%, because then maybe they just halt the stock market like Turkey did today. That they halted the stock market, and I'm sure everything was fine.
They halted everything. Yeah, they halted everything in Turkey.
Yeah, the currency has lost 54% year to date, as real rates fall well below zero, with inflation now standing an annual 21.3%.
Think about that 54% loss in purchasing power. If you had that money in Turkish lira in your retirement account, like think about that. You lost 50% of your savings, your life savings. Like wake up, people. Like that is like what this says. Like it's pretty extreme. Like it sounds like so little, like it's far away. It's in Turkey. Turkey is a G20 economy, by the way. This is just what I call the periphery demolition before it comes back to roost into the United States that controls the whole monetary system.
Yeah, I mean, from what I hear, it's like one of the most beautiful countries in the world with one of the most beautiful women in the world, and but the thing is, and it used to be like a major, like a Persian Empire, starting around there. So,
well, sorry to interrupt you, but what's his name? Erdogan. He wants to rebuild the Ottoman Empire, and actually coins from the Ottoman Empire did destroy themselves, but over 800 years it took for them to destroy themselves, the value of their currency, like their actual money, to go from silver to copper. But of course, like this moron Erdogan over there, like he probably sued. He sued like journalists in Germany for talking bad against them.
But the thing is, everything was fine there, a couple of years ago, and if they had like a Tim and John over there, they would have seemed crazy to talk about inflation, and then
they've been put in prison until they'd be probably assassinated.
Well, it's fine until it's not fine. So, I mean, everything is fine there. Everything's fine at the central bank until boom, it happens overnight, which is actually sort of what my article was on Freedom's Phoenix with Ernest Hancock. Had just a who's who of people, and it's a who's who of people. Then John and I somehow snuck in there. People like James Corbett and Paul Rosenberg and Doug Casey, Tina Marie.
Paul Rosenberg and Doug Casey is epic. Like those guys are fucking geniuses.
Patrick Wood of Technocracy.news. I mean, just the fact that you're in the same thing as James Corbett, I mean, is big enough on its own, let alone the others. And Heather, we'll have that in the show links. If you want to go to Tim and John's show to sign up, we'll put that out in some of our next email blasts as well. And I'm probably gonna eventually get some like hard copies of this to be able to send out. But anyways, the thing is, it's always fine until the day it's not fine. And so, what's going on in these other peripheries is basically, sort of what's going to eventually come home to roost here.
Yeah. And Tim, if you could pull up one thing, I know we're running late here, but let's pull up one more thing to really put things into perspective for people. So go to Trading Economics, put in, go to the bottom of the screen. There's like a list of like all the countries and their GDP area.
Okay.
Yeah, there you go. Put on the plus, and then what you're gonna do is you're gonna click on inflation rate. Go to the top and click on inflation rate, and then go down a little bit. Okay, so look at all the countries with like double-digit inflation, which is pretty damn insane. Okay, there's no like big nations there yet, but they're getting there. Like look at Brazil, like that's a major economy. And then if you go further down, like we got to compare the United States right now to other nations. We like to make fun of banana republics and all this stuff, but let's see where the United States and who they're gathered together with. Okay, so there's the United States with 6.8.
Iraq.
Like Kosovo, Liberia, Mozambique, Chile, Myanmar, Nicaragua,
Iraq.
Tunisia, Mauritius. Like, come on. Like, these are like, they always make fun of these nations for being fucking banana republics. And now where is the United States right now?
Togo. I mean, Togo, South Sudan,
Yeah.
and Guyana have less, and Bangladesh have less
And
inflation
South
than the United
Sudan was just in a big inflationary scare. Like this is insane. Like who were gathered Egyptians have always been like their
States.
Egyptian pound has always been struggling.
I've
Lesotho,
never
yeah.
even heard of this country.
No, I know what it is. It's inside. It's actually inside of South Africa, Lesotho.
Leso.
I'm a geek on geography, by the way. So if you have any questions, Tim. Anyways, but like look at all those countries in front of the United States. It's pretty insane. I just wanted to put that in perspective of people to actually, you know, people are always making fun of these other nations for being like, oh, it's a banana republic, you know, like they got high inflation. They're, you know, like they fuck up their monetary policy. They have no clue what they're doing. It's like, yeah, we're the United States right now is right there, and Canada is at 5%, but I think like Canada is probably at 25, to be honest with you. Like looking at both of my, like I work in a company, like on my regular daytime job, I do low voltage installations. My stuff is up 20% on an average, I would say, in prices. Then you look at the electrical side, like they're up like substantially. Our copper wiring, which is a substantial part of what we do, is up, 100% a lot of times. So
You
yeah,
know,
inflation is it's nowhere to be seen. Like it's 6.8% or 4.1, I think we have in Canada. Like you guys are totally stupid to think that, that is real.
and I've got, a bad dad joke to end this. And now our time is up. So it's not the only
Yeah.
thing that's up. So our time is up for this episode. Make sure to go to timandjohnshow.com. We're trying to do some of these other shorter episodes, shorter, relatively speaking, compared to, other stuff we're doing. Let us know how you guys like it. What lengths, if you guys want to, vary it up. But anyways, also, appreciate everyone who's watching, listening, subscribing. I think on my channel, I'm like 9 people away from 3,000, which probably means I need to have like 1,000 people join before they'll show me those extra 9. But, it would be nice just to get over to the 3,000 before we eventually get kicked off. And also I've got crypto IRAs over at the LibertyAdvisor.com, where my listeners, I will bump down my minimum for 25,000 to get an account to do crypto IRAs, where you can have actual Bitcoin, actual Ethereum, not a trust of it. And it's actually cheaper than buying the trust ETF version of it. Again, the LibertyAdvisor.com. Also get the book, How It's Rigged, over at, if you want to text Liberty Advisor, one word, no spaces, to 71441. That will then give you all the links to the book I wrote on inflation, and I wrote that 5 years ago. And John, you want to give some plugs?
Yeah, make sure you go to my website, theeconomictruth.org, where you can find my books and you can find all the different stuff that I do. I also have, like, if I track the Fed's every move with my Fed repo stats that I have, and also Bank of Canada. So that is released on a daily to weekly basis, all the stats there that you could go and look at, like a lot of detail, not as extremely detailed on, like what they're buying and stuff, but pretty good. And then of course, go and check out Tim and johnshow.com, which, we always share a thing. And the thing is, we actually have our video up there where it's not actually attainable for censorship at all, because it's on our own platform. So yes, do that, and make sure that you stay safe out there, because it's getting crazy.
All right, take care, guys. Peace.